Okay, let's have a look at the Euro US for the 16th of November. And the first trigger is off the bottom of that channel. I'll double tap through here. If you missed that first trigger, you can see the market reached down, broke the top of this channel. Your expectation is for it to pull back to that value, and then it broke through there, so it should pull back to that value, and then very late in the piece it should pull back to that value. Now, they're not guaranteed, but you're looking at the levels. You want to look at the channel and look at a 50% mark, and if those two work in place, work in conjunction to point to the same place, then take a trade. All right, Frankfurt, nothing before Frankfurt. I was expecting a bit more activity, considering Asia was pretty busy for a Monday morning. All right, C-click, the low, first bounce is here, second bounce obviously there. So the range for you to look at taking profit is somewhere between the top yellow zone and that yellow zone. The market actually pulls back to here, so expectation is there. I'm going to put a horizontal support and resistance point there, hide the channel. When you are concerned about a range because you're not sure of those 3 points being the 50%, just look at the last channel. C-click, C-click, and there's your take profit. Okay, conservative here, less conservative there, but it's within a pip and a half of each other. Okay, I had my take profit there. So that is a 31, so 30 pip move for the Frankfurt push. I wasn't fast enough. I should have had an entry order in there, but this candle pushed out and I didn't move fast enough to put the entry order in. I also failed to activate the second chance, so it reached down in this bear candle and then reached back up. I should have had an entry order on that high of that bear candle. I did not, but I did put it back in place. Once it reached down here, I had an entry order sitting there and that was activated by that wick. So entry order sitting there, activated here, and then the market went down. Our initial, well, if you want a very aggressive take profit position, you'd be doing something like that, but realistically that's the last channel, so you're expecting a bounce around here. This is where you're looking historically, that low or that low. You guys have seen enough of my videos to know that I'm extremely conservative in my take profit. I would look at this zone through here as being the pivot point. So there's your pullback, there's your take profit, there's a nice pivot historically, so take profit there. And that is an additional 24, so 23 pips, brings you to 53 pips for the session so far. Next trigger is off top of that, and the last channel, now bear in mind that you should do the overall move first, so you're expecting the market to come down somewhere into this zone. Okay, it reaches back to here, so I would be taking profit there on the last leg. Now it turns out it goes a little further, but best to take that 17.5, so 16 pips, which gives us 69 pips so far. You could take a speculator long here and then another one long here on this double tap and a short through there. Now you can see that is the pivot point. The market's reached back and bounced. Here you've got a double tap looking at the previous channel. So C-click, the market has a lot of noise through here, initially it breaks that and that. So your expectation is it's going to bounce somewhere through there, and then you just look at the last channel being duplicated, which is C-click, C-click. You're expecting it to bounce in that zone. We get a double tap, and at that point you look at the last channel being that. You're hopeful of it going up high. The market peters out at this point. So there's your take profit, which you would tighten up to this high. So CV, click that, and add an additional 25.5, so 24 pips to your tally, which brings it to 93. I stopped trading after that leg. Once again, it's a lifestyle thing. A few hours is enough for me. The American session, or the New York session, drifted down, so I won't bother going through the analysis. Whenever you're reviewing the market, the prior activity, C-click and then CV-click the ranges to have a look at your 50% points and then go through them historically. Now that is very strong. As you can see, it bounced quite aggressively on that point. 1, 2, 3, not so much there, 4, 5, 6, 7 times before breaking that. Once it broke that channel, you can see the market doubled it. It's a very accurate, simple and fast way of determining triggers, so your entry points as well as your take profits. Hope the channel analysis is impacting your trading in a positive way. Good luck with your efforts, and I will come back tomorrow. Bye.